Welcome back. Okay, the market appears to have now just clung on to that 5945, 5940 mark. So let's bide our time and watch and see how it manages to negotiate the last 1 hour of trade. For the moment, expecting, of course, that this peace will remain in the markets, let's shift focus to individual stocks. Joining us now is Anand Agarwal, the CEO and Director of Sterlite Technologies. Anand, there have been some concerns expressed by some investors, brokerages, that there is some bit of near-term pain in terms of power grid cancelling some orders, power conductor business, as well orders from China not coming through for optical fiber. How are both these businesses doing, power conductors as well as your optical fiber business?
Sure, Lata. At the end of Q2, we had this visibility. There has been no cancellations. There has been delays on orders in the power grid business. So some of the orders that we were expecting to do during H2 of the current year have effectively shifted to the FY12. So for us, FY11 is slightly, from a capacity utilization purpose and order book purpose, is slightly low, but FY12 looks very strong.
What would be, how much lower would it be, Anand, and therefore how would you peg second half revenues vis-a-vis first half?
In terms of revenues, currently H2, H1 should be more or less similar. However, in terms of bottom line, we are seeing H2 to be slightly lower than what we did for H1. And but our current focus is in ensuring that we have a decent order book for FY12, and we are seeing pretty good visibility on that.
Mr. Agarwal, you mentioned that the orders have simply been delayed, which means your revenue would shift on to fiscal year FY12. So what's your expectation in terms of revenues for FY12 and also perhaps profits?
FY12, right now, the order book is currently in the stages of getting finalized, but we should be definitely doing revenues in excess of 3,000 crores, between 3,000 to 3,500 crores. And in terms of bottom line, I believe once the orders start getting finalized over the next, we are seeing good visibility of order coming over the next few weeks. We are getting orders as we speak now. So we would be in a better shape of giving visibility on profits for FY12 maybe 4 weeks from now.
And on the optical fiber side, we believe that there is some slackening of demand from China, on account of which there has been a decline in realizations. Is that true, and where do they currently stand?
Sure. China had been the very, very fast-growing market for the last 5 years. The volume increased from almost about 15 million kilometers to about 80 million kilometers. So there has been some slowing down of the Chinese market, and that has led to some lowering of pricing, and that has affected our bottom line. The pricing currently for fiber, which had been about $8.5, has come down to $7.5 per kilometer.
So how will this impact your margins? Your guidance?
In margin terms, it would affect us by about between 2 to 3%.
Okay, let me just fling these numbers at you. The brokerage expectations for the current year in profit is around 190 crore, 185, 190, and for next year FY12 at about 260. Are they are these estimates squaring with what you expect?
As I said, for FY12, we could be doing better. For the current year, should be closer to what we would be closing at.
All right. Thanks, Anand Agarwal, for joining us with those details. All right. So some sanity appears to be returning to the markets as well. 5950 has been held for the moment, but only for the moment. We still have a last crucial 1 hour to negotiate, and we will have non-farm payroll numbers coming from the US. It's not going to be a very easy last hour to negotiate. We'll take a break and be back.